Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Well, we do not want to get ahead of ourselves. To be fair, it is smart to be researching what a Kamala White House might be like and to be thinking about the policies that could impact every aspect of our world based on the outcome of that U.S. presidential race. On that race, the vice president now likely, it seems like there's a lot of support.
I think it's fair to say likely. I think it's fair to say it's becoming more and more likely whoever endorses her next, right?
Yeah, we're talking about Kamala Harris, expected to be the Democratic presidential candidate. We're not quite there, but it does look like it's pointing in that direction. Earlier today at a White House event, staying mum about it all, except when it comes to President Biden.
And I am firsthand witness that every day our President Joe Biden fights for the American people, and we are deeply, deeply grateful for his service to our nation.
That's Vice President Kamala Harris earlier today from the White House. Many sectors, from banks to EVs to big tech firms, likely will face a status quo policy environment under Vice President Kamala Harris if she were to win the presidential election in November. So writes Bloomberg's Nathan Dean. He's Bloomberg Intelligence Senior Government Analyst, and he joins us from our Washington, D.C. bureau. Nathan, good to see you this afternoon. So the first question is, what might a Kamala Harris White House and administration mean when it comes to policies and changes from what we saw or are seeing with a Biden administration, a Biden White House?
Yeah, so that's a great question. You know, we're telling clients this election was really about three things. The first is tariffs, second is taxes, and the third is the sector impacts. Now, when it comes to tariffs, you know, you have this binary choice between President Trump, who has said 60% tariffs on items from China, but Kamala Harris, as a senator, was somewhat skeptical of the Canadian-U.S.-Mexico agreement and also the Trans-Pacific Partnership, and largely due to climate change concerns. So there's a little bit of difference between her and Biden on tariffs. When it comes to taxes, well, you know, we actually view that President Biden moved closer to Kamala Harris's positions on taxes than she did to his when he became president. So I would anticipate a continued focus on lower to middle income consumers, because remember, the Trump-era tax cuts expire at the tail end of 2025, and there's going to be a lot of tax debate on how to keep those going forward, which I think is what Kamala Harris would want to do. And then when it comes to the sector impacts, when it comes to banks, EVs, TMT, technology, antitrust concerns, it's largely status quo, because a lot of the regulatory leadership that President Biden has in place right now, we think is very indicative of what a Kamala Harris presidency would look like. And because a lot of those proposals are already underway, the first 2 years of her administration, if she was elected, I think would be finalization of those proposals.
To be fair, I mean, doesn't it make a difference in terms of what happens in Congress too, right, when we think about policy changes?
Absolutely. I mean, when it comes to that, it's essentially that's in the tax debate. It's called reconciliation. If the Republicans or the Democrats, let's say the Democrats have a great night, if they have the House, the Senate, and the presidency, you can use this process called reconciliation to essentially do what you will on tax reform. This is how the Trump-era tax cuts got through. This is how Obamacare got through. This is how the Inflation Reduction Act gets through. But if you have a gridlock Congress, then obviously that type of broad fiscal spending, other injection into the economy or a tax incentive or a tax cut aspect somewhat becomes narrowed. And so if you have a gridlock Congress, you have a lot of these grandiose ideas out there, but you are going to need Republican or bipartisan or Democratic support, whoever is the president, to get that through. And as a result, it's more nuanced changes, sector impacts and so forth, rather than grandiose plans.
I do wonder, Nathan, at this point, listen, it's 24 hours roughly, right, since we got the news of President Biden yesterday saying that he wasn't going to run for a second term. Having said that, actually, folks, we're going to head to D.C. and that we have House Minority Leader Hakeem Jeffries making some comments. Let's listen in.
When President Biden and Vice President Harris first took office on January 20th of 2021, the Biden-Harris team assumed a public health crisis, an economic crisis, and a democracy crisis in the immediate aftermath of January 6th at the same time. And thanks to the leadership of President Joe Biden and his partnership with Vice President Kamala Harris, dignity and decency and a democratic way of life was restored to the Oval Office and 1600 Pennsylvania Avenue. We owe a debt of gratitude to President Biden for his tremendous leadership, and I'm also thankful for the incredible partnership that he has had for the last 3.5 years with Vice President Kamala Harris.
Leader Jeffries.
Leader
Jeffries, first, will you endorse Kamala Harris? And then I have one other question for you.
Well, Leader Schumer and I are scheduled to meet with Vice President Harris shortly. The House came back into session today. The Senate does not come back into session tomorrow. I'm excited for that meeting, and let me say this, that Vice President Kamala Harris has excited the community. She's excited the House Democratic Caucus, and she's exciting the country. And so I'm looking forward to sitting down with her in person in short order with Leader Schumer, and we'll have more to say about the path forward as soon as that meeting concludes.
All right, everybody, you have been listening to House Minority Leader Hakeem Jeffries up there on Capitol Hill, making some brief comments. Did mention that leadership is expected to the Democratic leadership to meet with Vice President Harris shortly, and we'll have more to say after that meeting, but also has talked about the Vice President being kind of exciting the community, the Democratic caucus specifically, and the country. So making some comments, and also, of course, making some comments also about the Republicans.
Yeah, he did say that Republicans are having a, quote, meltdown. He called them extreme MAGA Republican policies are unpopular. He mentioned Project 2025 being unpopular, and he said that all we want to do is have a debate about moving the country forward.
All right, so we will await, of course, his meeting with the Senate Majority Leader Chuck Schumer, and, of course, with the Vice President Kamala Harris, and look for some more comments after that. In the meantime, let's get back to Bloomberg's Nathan Dean, Bloomberg Intelligence Senior Government Analyst, still with us from our D.C. Bureau. Hey, Nathan, like you, like all of us, we continue to listen to various comments, certainly right now from the Democratic Party. How do you kind of parse through what's being said politically as you try to figure out what might be impacting policy, rules, regulations, things that are important to the Bloomberg audience right now?
Yeah, so, when President Trump announces his intentions, a lot of it is rolling back President Biden-era regulations or legislative achievements. And so Representative Jeffries right there just mentioned the Inflation Reduction Act, which piqued my interest because, the Inflation Reduction Act is one of those big, grandiose pieces of legislation that is not only applicable to healthcare and tax reform, but also applicable to the clean energy sector. And so my colleague Rob Barnett actually put out a note this morning talking about what Kamala Harris would do to the Inflation Reduction Act. And essentially, not only would she support it, potentially she would go back and even boost it. So, the renewable industry is something that we've been looking at in terms of a high catalyst event with the election, because if President Trump comes in, you have this tendency that you may be able to roll back the IRA, tweak it, adjust it, amend a lot of the clean energy CapEx spending that these companies like First Solar have planned over the next few years. But Kamala Harris on the other side would actually go and enhance it and boost it. So there are a lot of politics and a lot of headlines getting thrown around there. But we ultimately just have to ask, these statements come out, these questions come out. How do you get it through Washington?
Nathan, what about when it comes to energy, for example, and what happens to energy companies under a Kamala Harris administration versus a President Trump administration?
Yeah, so, the thing here is we often tell our clients to remember that there are three ways that things get through Washington. First is legislation. You don't need to be me to know that gridlock happens in Congress all the time. The second is regulation. There's a lot of rules coming out from the EPA, for example, but regulation is a little bit different because regulation, yes, you can bypass the opposite party, but you have to use this process called the Administrative Procedures Act, which takes time. If President Trump were to win, you're looking at probably 2 to 3 years to roll back some of the Biden-era regulations. That's also notwithstanding that maybe the courts are going to overturn you in light of some of recent Supreme Court actions. But for the energy sector in particular, I would stress the third way, which is executive orders. Now, President Trump comes in, expect a lot of executive orders. Most of them are symbolic in nature. They're fancy ways of the president picking up the phone and saying, I direct my agencies to do these regulatory rulemakings. But there's always this headline risk, that other 15%, which is like the LNG pause and so forth, where the power of the presidency is more powerful. So the energy sector does have some aspect that falls into that executive order bucket. I think the risk is there if President Trump wins. If Vice President Kamala Harris wins, it's more of a continuation of the status quo.
Hey, to be fair, it is a race, still expected to be a very close race, whoever it ultimately is come November. You, as a policy analyst, are, I'm assuming, continuing to look at both sides and both outcomes, whether it's a Republican win or a Democratic win.
That's correct. I mean, the way to do this is scenario analysis. And so we have for example, we have this matrix on the terminal called the BI election matrix, and you can look at the Trump scenario versus the Democratic scenario because, Vice President Kamala Harris is not the nominee yet. Mm-hmm. If she is the nominee, it'll be the Harris scenario. But in conducting this scenario analysis, you have to look at what the makeup of Congress is. Like we mentioned before, if it's reconciliation, well, President Trump could potentially repeal a good portion of the IRA without Democrats, any type of opposition. If there is gridlock, it means legislation odds actually come down. So as you tend to think about the election and how you prepare for it as an investor, think of this: scenario analysis, process, and procedure. Because whether it's legislation, regulation, or executive order, generally there's a process associated with this. And generally, you do get about 6, 9, 12 months before the actual final catalyst takes place. And so you can actually then plan accordingly to that.
Well, you've set us up so well for our next conversation. Nathan Dean, thank you so much. He's Bloomberg Intelligence Senior Government Analyst with us, joining us from our DC Bureau, so talking about some of those outcomes. So let's get a little bit more in terms of what investors might be thinking about on this Monday.
So that's where we go now, to the financial markets and how this past weekend's political developments changed the outlook. With more on that, we're going to bring in Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams, who joins us from New Jersey, and Bloomberg News Chief Correspondent for Global Macro Markets, Liz McCormick, here in our studio. Gina, I do want to start with you because on the equity side, we're certainly seeing a rally underway today. Is it fair to say is it fair to read into the equity market reaction at all today based on what happened politically in the last 24 hours?
I think it's really difficult to draw a direct line between politics and stocks for a lot of reasons. I know that the narrative has really revolved around this so-called Trump trade, but when you really dig into the data, we're not seeing much of a politically oriented trade emerge in the equity markets. As a matter of fact, what's really occurring in the equity markets is a combination of a fundamental rotation, a fundamentally driven rotation in leadership. We are in the midst of the earnings season, let's not forget. And then also the prospects for a Fed ease. So as the markets have gone on again, off again, and the prospects for a Fed ease come September or maybe November, that is definitely impacting stocks and risk tolerance. And then the earnings results are absolutely having an impact, in particular analyst expectations. And as those expectations change, we're seeing stock prices start to react.
All right, so Liz, come on in on this. Same question to you. I mean, I am wary too about talking about a Trump trade, a Harris trade, or whatever trade. There's still 105 days to go until the election.
But who's counting, though?
We all are. What does the weekend development mean for global markets in the recent kind of macro market view?
Yeah, well, I would say to your point that some people are saying, overall we have a lot of time here. And like Nathan was getting to, even whomever wins, it's going to take some time, even if it's executive order, to get pushed through things. So we might think we know exactly what the Trump trade is, but I would say overall, we talked to a lot of people on Sunday after this announcement, that people feel like at the minimum, and if you look at the predicted odds on Bloomberg, which you can find, that, this change, Biden saying he's not going to run, Harris so far seeming the presumptive nominee, maybe increase the odds a little bit that the Democrats may win, right? Because people were feeling like, maybe Biden is not going to win. I mean, if you look at the predicted odds, Trump is still very high at a little over 60. But maybe, and I would say, I think you were getting at earlier, but it's also down ballot candidates, right? If anything, this slightly seems to some investors to reduce the odds of a Republican sweep, which the sweep thing is the biggest thing, whether it's Dems or Republicans for bond investors. They like gridlock, like Nathan talked to, no big changes and status quo. So that may be help. But I do think, at least on the fiscal side, we know both sides want to spend. No one's really cutting the deficit, but that people are leaning to bias that if it's Trump, especially if it's a Trump and a red wave, that there'll be more fiscal spending.
Liz, is there a certain part of the curve that you're watching right now? Where should our investors, our audience be looking?
Yeah, well, it's first of all, the slope of the curve. 2s, 10s is a very popular one. That kind of, we saw some flattening today as this reanalysis of the Trump trade, but now it's about flat. So I think people are still digesting what is this going to mean. I know some people are still saying who's going to be on the ticket in full on the Democratic side. We have the convention. And like Gina got to, I think what bond investors are saying, okay, let's go back to our knitting. What really matters this week? We have some key data, GDP, PCE, deflator. Very
and the Fed
key.
meeting next week.
And the Fed meeting next week. And, from our Washington great Fed reporters, they kind of wrote that it's probably Fed's going to signal that maybe a cut is coming in September, which the market is already priced for. So I think bond investors are saying, I think Mark Cabana at Bank of America said it best, like the main certainty we know about this election is uncertainty. You know what I mean? So
Totally.
That's in the bucket, right?
Well, if anything that we've learned, right, over the last 2 or 3 weeks, that like things can just be turned on their head. Gina, come on back in. You did mention, I was thinking about it this morning coming in. I'm like, okay, what is it going to be like? And I'm thinking we've got some big earnings. Like earnings still matter in a big way for investors.
Yeah, as they should. And we've actually had a phenomenal earnings season so far. Financials really kicked us off on the right foot. Financials posting 4 times the growth rate that was anticipated at the start of the season. So very clearly better performance emerging out of financials. At the same time, they get the tailwind of the yield curve that has emerged over the last several weeks. So financials have really helped. In all, S&P 500 earnings are now tracking close to 10% growth year over year. At the start of the season, they were at 8%. So not only are financials beating expectations, but analysts are still marking up their forecasts for the most of the rest of the sectors, with the exception of energy. So the index is on pace for a very strong earnings season. We'll see if that continues. We get into the bulk of the earnings season over the next couple of weeks. Of course, everyone's eyes are squarely focused on mega cap tech and whether or not those companies, in particular in the semiconductor space, can continue to beat and raise expectations as they have for the last several quarters.
Gina, earnings obviously crucial. We're going to talk about that a lot throughout our program today. But as Liz mentioned, the Fed is meeting next week. I'm wondering from your perch, how are you watching what the Fed says and what the Fed does?
Yeah, I think the Fed is mostly manifested in small cap performance. So what we saw very clearly on July 10th and in July 11th of a few weeks back. Was it last week, the week before? I'm losing track. Nonetheless,
we all are.
Mike McKee said on Twitter or X over the weekend something like, this is this period where you have a couple of weeks that feels like a year, basically, or a year's of history.
Yeah,
worth of history.
It's been wild. But we did see an incredible performance spurt for small caps, really related to the Fed. When we got that CPI report in the middle of July, we did see Fed prospects really change materially. And that resulted in an incredible surge in small cap stocks, one of the 3 largest surges of the last decade and a half, as a matter of fact. So small caps, I think, are going to really be the signal as to whether or not the small cap index moves. That will depend on how the Fed guides for September. I do think that as long as the Fed is guiding for September or November, that's probably a nuance that the equity market is not going to care too much about. They'll need to see, though, the Fed keeps suggesting that the path to the forward progress is definitely an ease as opposed to a continued hold.
Final thoughts, Liz, in terms of as we set up for the week and just kind of what are you thinking about kind of keeping just a watch politically? Is there something that could develop over the week that would make you start to, I don't know, just pay a little bit more attention to it? Or is it more just the Fed, the data?
Yeah, I mean, I'm hoping politically we've probably seen the biggest, announcement for a while, but we don't know. But what Gina brought up, I was thinking of it too, like with the data that we're looking at, remember unemployment claims, because the Fed has really talked about their dual mandate. It's more in balance now. So people are really, that's top of mind because that's really fresh data.
Right.
And, talking about small caps, people doing well on the wealth effect. So right now the consumer's still doing okay. Retail sales was pretty good last week. So I think the bond market wants to see, we're in that like wonky, I forget the term, where we start to get the unemployment rate rise, not just, people hiring less, that Bever curve or whatever,
right.
McKee would know. So if we see claims keep going up, that's going to be bullish for the bond market because that bodes for, we're priced about 60 basis points of easing for this year, maybe
right.
more,
Yeah, that whole idea. All roads lead back to Michael McKee. It just always kind of happens. And you both, to be quite fair. Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams joining us out there in New Jersey. Bloomberg News Chief Correspondent for Global Macro Markets, Liz McCormick, right here in our studio.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, we've talked a lot in recent months about the growth in demand for electricity in the coming years. And Carol, just last week, the International Energy Agency came out with a report that said demand globally for electricity is increasing at the fastest rate in years. It's due to heat waves.
Makes sense.
More tech that runs on electricity. Think EVs and electric heating.
Totally.
And then economic growth around the world, because when more people are, doing well, they buy things that plug in and use electricity. So demand for electricity globally is expected to grow by about 4% in 2024, up from the 2.5% in 23, according to the IEA.
That's a big bump up year to year. Here in the United States, we get about 60% of our energy from fossil fuels, 21.4% from renewables, such as wind, hydropower, and solar, and about 18.6% from nuclear. But there's a startup out there, Tim, that really kind of wants to change that.
And they want to help the U.S. go more nuclear. It's called, the Nuclear Company. And they've recently announced plans to build a fleet of nuclear power plants in the U.S. But as you know from our program, that is easier said than done. Juliann Edwards is Chief Development Officer for the Nuclear Company. She joins us from Pittsburgh. She also chairs the U.S. Women in Nuclear. It's a 5,000-member organization that advances the role of women in the industry. Juliann, good to have you with us. As I mentioned, we talk a lot about nuclear energy on our program. Our colleague Will Wade actually was recently on talking with us, talking about the huge party that the nuclear industry threw in Georgia to celebrate the U.S.'s first reactor in 30 years, the first one in 30 years. How are you going to build a fleet of nuclear reactors? It costs a lot to build them. They go over budget. People historically don't want them in the backyards. And then there's the waste. How are you going to do it?
Well, first off, it's great to be here. Thank you so much for having us on. The Nuclear Company is just honored, as well as representing the U.S. Women in Nuclear organization. And yes, I did see the streaming of the event that went at Vogtle, and just the amount of support that we saw from both government and industry. And it was exciting to see the rallying and to see our country put 2 new reactors online. And it's going to take a coalition, to answer your question. It can't just be one single entity. And the Nuclear Company is here to ensure that we stop talking about building and we go straight into actually action and building new nuclear.
What would you say are the biggest obstacles at this point, Juliann? Is it, not in my backyard? Is it the regulatory? I mean, it's utilities, right? Like, these things aren't just built overnight, but what are the biggest stumbling blocks?
Sure. We're actually seeing a big pivot. It used to be not in my backyard over a decade ago, for sure. And it's pivoted because we're seeing, honestly, a resurgence and understanding of the benefits nuclear can bring, not only in clean, reliable energy that's on day in and day out, but also the fact that it's no carbon emissions, the amount of economic benefit that goes in these communities. And I would say the hurdle right now is it's difficult for one entity to take that balance sheet risk on, onto their shareholders and onto their stakeholders. And that's what the Nuclear Company is focusing on, is building a coalition of public and private partnership that ensures that capital investment is spread across those that will both benefit and be a part of the long-term life of these facilities.
What can you tell us about the facilities? What kind of reactors, for example, are you planning to build?
Yeah, so there's a number that are currently licensed by our regulator here in this country, the Nuclear Regulatory Commission. The Nuclear Company is very, very technology agnostic today. However, we are going to narrow our focus on which ones are actually currently licensed by the NRC, because that will allow us to accelerate and get clean neutrons online as fast as possible.
So would that be like a Westinghouse AP1000, like they just finished in Georgia?
Those are definitely on the list. There's a number of actually licensed technologies that are currently approved by the NRC, and more will come out on that probably later this year.
What about in terms of nuclear waste? I feel like you can't bring up reactors without thinking about what do you do with the nuclear waste as a result of that. Have we really found a good way of dealing with it?
Nuclear waste is a conversation I talked a lot about at a previous company I worked at. Nuclear waste is not anything compared to the problem of our global crisis around clean energy needed to lower carbon emissions. And so I would say nuclear is probably the most responsible power generation source on the planet, because what they do in terms of establishing a program and financing for managing that nuclear waste is unlike any other generation source that I've seen. There's an establishment of an asset retirement obligation fund that's set up right when the plant begins operation, and over the life of the reactors, that fund begins to accumulate to ensure that at the end of life, you have the financial, backing to go ensure that that facility is decommissioned and that the waste is properly stored on site. Long-term storage, we're still working on a solution in this country.
It's a problem though, right? Fair to say. I mean, I guess that's where I wanted to go with, the waste. It stays with us for a long time. And so you've got to figure out, I'm trying to be smart here about like, what do we do with it in a safe way?
Yeah, we're definitely trying to evaluate as a country, what can we do technology in terms of this? You see other countries that have evaluated the recycling of it and reusing it and repurposing it, much like we have done actually in a non-proliferation format at the MOX facility down in Savannah. But I would say the problem is not as big and large in scale as folks perhaps need to understand the details of that. I mean, you could fit the entire nuclear waste from a twin-operated nuclear facility on the size of a football field. I mean, it's that small in terms of 60 years of waste. So it's not as astronomical as folks are actually.
But is it a case of not size, but just what it could do if for some reason the, waste facility or the storage, there's a problem? It's not just a case of the amount, right? It's just what could happen if something goes wrong.
I mean, these storage casks that are designed and manufactured and regulated, very, very highly regulated, are safe designs. There have been no accidents related to exposure of radioactive waste in this country. And that's a testament to the abilities and concentrated effort on making sure that those spent nuclear fuel canisters are securing that waste while they decay over the next couple of years.
Where are you planning to build these reactors right now, at least in the early part of the company?
Sure. The nuclear company is evaluating a number of sites. Again, will be disclosed later this year along with the technology. When I look at what is the fastest way that we can put clean neutrons online, I look to the sites that currently have two factors. One, interconnect. You got to be able to have sites that have access to a location that can distribute power in large scale. And then two is making sure that we have sites that are permitted, that have passed that due diligence of technical and environmental assessments by the Nuclear Regulatory Commission, by the EPA and the state stakeholders. So there's a number of those sites currently being evaluated and more to come on where those exact locations will be.
And what about who will buy the power? Who's going to do that?
I mean, you and I are buying the power right now. I'm sitting here in Pittsburgh.
But not from a reactor that you built.
Well, I mean, the offtake for nuclear power when distributed goes to residential, commercial, industrial. And so when I look at the coalition, there's going to be members that are going to be a part of this community that we're building that will enable the offtake, those agreements to be solid and bankable. And so you're looking at the large industrials and hyperscalers that have come out publicly and stated that they want to see more nuclear in this country.
So we are Bloomberg. We're always curious. So what are the plans to build? Talk to us about that coalition. We have about a minute left here. Who's already kind of ponying up to do something and move ahead?
Yeah, I got to be cognizant of like just the members that we have, because some are publicly traded, some aren't. And I would say that it's very important to remember that we have seen enormous bipartisan support. So we're going to be working very closely with the U.S. government. They've enacted enormous amount of legislation. I mean, the Advance Act just a couple of weeks ago. And we're going to make sure that we leverage that relationship and build the largest public-private partnership that this country's ever seen.
I just want to talk money because these things are so expensive to build. How much have you raised? We only have 30 seconds left.
I can't talk about the raise yet, but I can tell you the investors that represent us, like MCJ, True Ventures, and others, have access to billions of dollars of capital, and they are fully behind us and supportive and making sure that we have enough capital to pass the due diligence tests and financial reviews that will be required to build gigascale and fleet scale reactors.
Juliann, just really quickly, 15 seconds. Does it matter who's in the White House in terms of your mission come November? And just very quickly, please.
No, very good question. And this is the biggest bipartisan topic. I mean, nuclear has been supported on both sides of the House, so we do not see this as anything that's going to prevent our ability to scale.
Juliann Edwards, Chief Development Officer of the nuclear company, joining us on this Monday. Juliann, thank you so much.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, as they say, tick-tock.
Jinx.
And by they, I mean, as Carol says, tick-tock. Look at that. We got less than 18 minutes to go to the close of trading on this Monday.
Near highs.
Yeah,
right?
Near highs. Equity market, a little bit of a rally that we're seeing today. Yeah. Let's see what Chris McMahon has to say about it. He's CEO of Aquinas Wealth Advisors. He joins us here miraculously in the Bloomberg Interactive Broker Studios because it was quite a journey for you to get here.
It was indeed. When I went out to Indianapolis Airport and my flight was canceled, and then I couldn't get a car because even the Hertz screens were screen of death.
Because of the Microsoft issue.
Microsoft, a little upgrade.
CrowdStrike, excuse me, the CrowdStrike issue, not the Microsoft issue, right? Is that right?
Yeah, but...
Is that right?
Brought the world to a halt, right? No big deal, though. We're okay.
Yeah.
Look away.
We're not going to talk about CRWD today until my decliners. Hey, front and center, what's happening politically right now? This was a surprise to a lot of people, at least the timing, I think.
Absolutely.
Sunday afternoon. How do you think the market is taking this?
We don't think the market cares that much. We think that the Biden administration and the Harris administration are the same in the eyes of the market, right? We think that there's been more optimism around Trump than previously, and I think the market responds better. The Trump trade is a little bit more positive than it was even yesterday. We think that people are saying, hey...
You think this is the Trump trade?
Well, I think it's coming. I think what's happening is people are saying to us, hey, look, Trump's going to win this thing, right? He's going to extend the tax cuts. He's going to cut interest rates. That tidal wave of cash that's sitting inside our short-term bond funds is going to come pouring back to the market. So I think the market is more optimistic about the Biden and Harris now administration not being able to pull this thing off as they were even just a month ago.
You don't think it's too soon for us to be making like kind of a Trump trade or even a Harris trade or a Democratic trade?
It's way too soon. Absolutely.
Well, I guess just, to be smart here, right? Like it's just, we've got a Fed meeting next week. Sure. Most would say that is really key in terms of what's happening in the markets. You've got earnings just getting underway. We've got some big ones, Chris. Obviously this week we've got Alphabet, we've got Tesla. That to me seems to be more front and center, despite how much time we've spent talking about politics today and certainly over the weekend. But I am curious what's front and center for you when you think about how to invest your clients' money.
I think it's fair. I think that you're right that the market isn't perceiving a big difference between Harris and Biden, as I said already. So they are going to look at interest rates specifically. I think that's the big issue. The consumer is tapped out right now. We're seeing that. Durable goods sales have gone down. We're seeing that the mid-market the person on Main Street is hurting. They're highly leveraged. And the question is, how are we going to help them reduce that burden, right? And I think an interest rate cut is critical to this. If we don't see, I think, a full point by the end of the year, I think the market, I think it's priced in a little lower than that. I know, right? It's a
full point.
That's what I think is going to be needed.
We went from like 6 to none to 2, and you think a full point?
I think a full point. I think we're going to have 2 cuts. I think it's going to have to count to a point.
When do you think we'll see the cuts?
I think we'll have to see at least a significant one, a half a point before Election Day. I think probably, September would be the last. It has to be, right? And I think that this Fed is very politically active. I think they're aware of this, and I think it has to be significant because the consumer is drowning in debt. The middle market consumer.
You think the Fed is politically active?
I do. I think they say they're not. I think they're very good at saying we're not politically active. But I don't think I don't think Powell's going to be if Trump wins the number one choice to run.
He did say, to be fair, in our interview that we published last week, Bloomberg Businessweek, it's the cover of the new issue, which, by the way, you can get now, but check out the story at Bloomberg.com or on the terminal. He said that he would let Powell finish out his term.
I agree with you. He did say that.
He did.
I agree with you that he said that. Yeah. Okay. Time will tell. Time will tell.
Tell us about your clients and your investors that you work with. Who are they? What are kind of top of mind for them?
I think a lot of people are still worried about traditional things. Do I have enough money to retire? Still the big issue, regardless of how much they've done. It's interesting. The last 24, 36 months have been great, right? The indexes have performed well. Certainly the last 24 months, people that are just balanced investors have done north of 12%. So they're comfortable. They have more assets, but I think they're more worried than ever. The geopolitical landscape is freaking people out. It is. They're saying, "Gosh, Ukraine, what's happening there? What's happening in the Middle East? And what does this mean for what does this mean for me as an investor? Are we going to have a catastrophic, adjustment in the market?"
Do you think that if Trump wins,
yes,
those fears would change?
I think. Sorry.
Yeah, he has talked, and Republicans especially J.D. Vance, have talked about the need for Ukraine to sort of be on its own. And then, again, I go back to the Business Week story last week. Trump said he wouldn't defend Taiwan if China invaded there. What are your thoughts around that?
I think people are looking a little bit more at their personal backyard a little bit more. I think if they feel that the border's a little bit tighter, I think if they feel the interest rates cut a little bit, I think that's enough to give people comfort and say we're going to be okay. And I think that, as I said, our clients are a little bit worried too about this whole, commercial real estate crisis, right? We're seeing 30, 40, 50% vacancy rates.
So what are you doing then with client money if everybody's so worried?
Well, with cash, you're still getting paid for cash. So our allocations are about 6% higher in cash than normal because they're happy to get 5% on that cash.
So if it's 6% higher, how much is in cash?
About 12%. Normally it's about double. So it's a double allocation. And I think we're also thinking about, if we're taking lump sums in today, we're not going all in the market. We're bringing in over 6 to 12 months. We're dollar cost averaging it in.
What would make you cut that cash allocation back to your normal 6% level?
I think probably over time, a full interest rate cut would make us have to do that.
You wouldn't want to do that before the rate cut.
Yeah, we want to. That's the balancing act, right?
Yeah.
We want to pick that perfect moment to go long on our bonds. Our durations are 18 months now. We want to take them out to 60 months at some point. We haven't done that yet because we're trying to figure out the exact day. If you guys know the exact day, I'd appreciate you giving it to me.
If you've upped your cash holding, I mean, the S&P is up almost 17% this year. I know we've seen a little bit of a pullback. NASDAQ's up almost 18%. Are your clients upset that they've missed out on some of those equity gains?
Well, no, because there's still 35% probably in the indexes, the big indexes that are okay with that. And also we back them up with stops, which our clients seem to like quite a bit. They're saying, look, I worked my life to accumulate this $2, $3, $4, $5 million. And if there is a 40% adjustment with the index, which happens, I know that I have some, particularly in a retirement account where there's no tax consequences, they're saying, hey, I have some downside protection as we're inching closer to retirement. We want to make sure we can protect the pile. That's very important to our clients.
So is that cash? Is it not in stocks or is it not in bonds? Like where would it go when
equities? It's out of equities because we really shortened up our durations about a year ago on the fixed income side. So it's on equity. We've reduced our equity exposure, still significant enough that they feel they're in the game.
Are you staying away from big tech as we get ready for earnings? Just got about 20 seconds here.
I think that rotation out of the big tech is reasonable. We're kind of about 30% in is where we were just 6 months ago.
All right, going to leave it there. Hey, Chris, thank you so much. What are you thinking?
I'm thinking I hope you have a better trip back home.
It's only
planes,
6
trains,
hours
and automobiles.
Great being with you guys. Thanks for having me.
All right, Chris McMahon, he's CEO of Aquinas Wealth Advisors and also Chief Executive Officer at MFA Wealth, joining us here in our Bloomberg Interactive Broker Studio.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.